Happy Friday to you, my friend. Good to see you. Yes,
Good
well.
to see you, mate. What a week it's been.
Yes.
I'm getting past the winter solstice and getting into that period of time where the difference between the colour of your skin and the colour of my skin is getting rapidly. So I thought I might just put the glasses on in order to frame a little bit of my complexion to the sun-kissed locks and skin.
There you go.
Of the Queenslander versus the Victorian.
Well, here, listen. I can give myself a little bit more of a tan if I want. Like, check that out. I can give myself more of a tan.
Look at you. Jeez, like that's an instant solarium. Mate, this is about as much as I can get. I can kind of go Oompa Loompa-ish.
Well, good to see a few people jumping on. There's a bunch on there, Andy. So hello to Alison. Hey, how are you? Good to see you, mate. Jeff, always there. Good to see you, mate. Good to have a few of you guys on Wine and Wisdom. Cheers for Friday afternoon.
Welcome, everyone.
Yeah, absolutely. I've got myself a little interesting drop today. I went down the shop and I just bought a bunch of random bottles of wine.
It's the SB.
It's called Fat Bastard.
Fat Bastard. What's the SB?
Fat Bastard. So, yeah, pretty good. So, anyway, it tastes all right. So there you go. We got Harry there.
The old bin one from the best of the Great West,
Nice.
the Western. So bin one. So apparently you're meant to grab this and throw it in the bin. Bin 2013 Shiraz.
Oh, that's funny.
Slowly coming out of the cooler climate down here, mate. We had sun down in Victoria. Can you believe it? We had sun.
I can't believe it. I think you're lying. I didn't. You have to take a photo, Andy.
I wasn't quick enough, mate. It disappeared
I'll just get my camera quick and it left. Well, good to see everyone on. We've got a bunch of people on. Harry, how are you, mate? Graham, Kelly, how are you? We got David there. We got Aaron. We got Deb. Annis.
I feel like I'm on high school here, mate.
I know.
Who can you see through the round window?
We've got a guest joining me. We've got a guest visitor tonight. You're on the live stream. Say hello, Jake.
Yeah.
Hello, Jake.
All right. Well, listen, I've got something to do, so you should rack off. Michelle's there. That's good. Crispy baby ribs. Yeah, that's it, Jeff.
Yeah.
Well, Alison's already in their team and gang with some questions, which is great. And having your first gin, Candice, well, that's the way to roll. And got an open home tomorrow. So good luck with that. Hopefully it all goes really well. But, as you guys... Oh, David's coming in from the Socialist Republic of New Zealand. Oh, well, there you go. No, well, good to have everyone here. And as always, folks, we do a quick intro before we get the afternoon rolling. Afternoon Wealth, Wine and Wisdom rolling. Andy Fenton, 20 years banking, finance and financial planning. And me, 20 years in the real estate game, coaching property investors across Australia and New Zealand. And, each Friday we've been getting together, talking and helping our respective communities navigate this crazy weird times that we have. And but and it happens in a bit of a structure. Often we don't stick to it, but we try to debrief the week, the news, and see if there's any questions, and we might even do some things you should know as we go. So as we roll into it, this is it. What's in the news? First part usually. Got any questions? Make sure you write them down. Alison's already dropped one in the chat for us, and things you should know. If we get a bit of time, we might do a little bit of that, Andy. But what's in the news over in your neck of the woods this week, mate? Why don't you kick it off? I kicked it off last week. I've got a few things up my sleeve, but what do you got for us, mate?
Mate, well, in your frame of the fact that we have a little bit of structure in this. From the great Yogi Berra, who we've quoted a few times in the past, when you come to a fork in the road, take it. And my spin on things, mate, is that we have had, obviously Victoria's in lockdown and all of those sorts of things. So I'm going to avoid as much as I possibly can talking about anything negative. Everything is positive. because I am sick. This is the negative part. I am sick to death of the bullshit that we watch on television that morphs and destroys the brains of us, destroys our will to live at times. And I thought for Friday, we're going to have a bit of fun and we're going to talk about all the positive things that are there. Obviously, due to my personality, there might be denotes of slightly sarcastic behaviour that may eventuate. But I figured that maybe we spend the time, Jace, because just as a frame, and my team won't mind me talking about this, but as Monday came in Victoria, and I know New South Wales have been locked down for a while now, and there was just a heavy Monday morning meeting. And I saw the news beforehand just scared the shit out of everybody. And it was like the great 1-2 punch. And it was at that point in time, Jace, where I decided that this Friday was all about bringing joy and happiness and actually the real shit that's going on that should be being reported. But we know that what makes headlines is fear and horrible stuff and all of that sort of thing. And it's not all like that. So, Jace, in the view of having some fun and bring some positivity to this, we're going to have a good look at what's in the news this week. And here's one from an old mate of mine, Tom Elliott. He admits that he was left shocked after hearing a person who recently paid $10,000 for a golden retriever puppy. $10,000. They're calling it the pandemic puppies, Jason. The pandemic puppies. It turns out the prices have gone through the roof during the middle of the pandemic. As we can see here, so many pets have been adopted during the pandemic that the shelters are running out. Apparently, the shelters said that they just can't put them down. So they're running out the door, so to speak. Pardon the pun. Speaking of puppies, we've got a long lost puppy. Britney Spears' father, Jamie Spears, agrees to step down. Let's have a look at the word agrees, Jason. When you're at the end of a court battle and you're beaten, you generally agree to whatever the court decides. So Britney's father has stepped down as the conservator of a $60 million estate. Was a $100 million estate before they got into the legal battles.
Yeah. Do you know the full story on that one, Andy? It's a crazy story.
Britney and I go back some years. To be fair, Jason, I know headline details. I don't know it intimately, but effectively.
Well, one of the things I think, and this is a good lesson over in your neck of the woods, Andy. In your world, you help people with, wills, powers of attorney, enduring powers of attorney, et cetera, et cetera. And we think, that's for old people, right? But let me tell you, folks, what happened here, and Britney had a bit of an issue, had a bit of a breakdown, and because she didn't have any of those things in place, like thought through them earlier in her life, her father, and I think it was her uncle, I can't remember, it was two people, took over her estate and literally put her in a funny farm and literally, spent 40 million of her wealth over 10 years and kept her basically like out of the picture. So yeah, it's an interesting one, mate. It's like it is an interesting part of the news, but also it brings home a lesson for us too. If you haven't got your wills, your enduring a power of attorney, those things organised, you need to have a chat to Andy. And I know you've been helping some of my crew, Andy. Big shout out to you, one of my team. She had some challenges with her mum, and you've been helping her out in that, and you've saved her literally, truckloads of money and costs and challenges and problems. So folks, we like to see the light side of the news, but also there's a lesson in it too, man. That's for sure.
100%. Look, it's all about structuring. It's all about pre-planning. And if it can happen to Britney, well, it can happen to you. And mate, it's an example of structuring gone wrong. And you took the words out of my mouth. Like this is something that we all need to be taking care of. And it might just be our fortunes of when we get a little bit older and we start to say some wacky things, and then the next thing the wrong powers of attorney who mightn't necessarily treat our wealth or our health with the same sort of wisdom and respect that we would. All of a sudden, things can change quite dramatically. And she did it again with her father, and unfortunately, she lost control of the entire estate. And mate, it is so so common in the world of finance and estates and business, and we call it a business continuity plan. You know, what happens if all of a sudden you can't take control? Well, if you can't take control, then Britney's dad will, and that's what we call milking the puppy.
There you go. Well, Calvin's a big fan of the puppy positive news up front, mate. So that's good. Good show. And then Alison reckons she was onto it 2 weeks ago. Alison, we could be got a little side hustle going on, Alison. Maybe.
Well, we did the math today. You can basically you can break even pretty quickly. But if you have a couple of these puppies and you start littering them a couple of times a year, but it's a $200,000 business these days.
Yeah.
The puppy pandemic has gone mad.
Well, I've got a young client who buys and sells shipping containers. So people buy shipping containers, and lately it's been a bit slower, but they'd get a shipping container of stuff from overseas. And when they got the stuff in the shipping container, they're like, oh, what do I do with this shipping container now? And he put ads in Gumtree and Marketplace going, I'll take your shipping container away for $100. Mate, he couldn't find enough places to keep them. And then he was reselling them for thousands of dollars. Like he basically had to go and rent a whole farm where he could keep all these shipping containers because people like, take my shipping container away. So, mate, yeah.
But it's unbelievable. Opportunities are everywhere. Absolutely everywhere.
Yeah.
So good lessons to be learned.
And that's a funny one, actually. Michelle brings this up. And if any of you guys remember, Alison, you might have been on the bus tour with Sam, but Sam, my business partner, does a spin on Rich Dad, Poor Dad, Andy, and he does a property investment version of Rich Dad, Poor Dad where he calls it Rich Dog, Poor Dog, okay? And if you want to go drive the suburbs and look for the rich dogs, that's where you should buy your real estate, not where the poor dogs are. And I think Michelle, there you go. If you got the Labradoodle with the perm, then it might be a pretty salacious area for real estate. That's for sure.
Mate, the other thing is you could actually get out of the poodle business or the what was it the doodle breeds.
The doodles, yeah.
We've got to be careful that I've actually said the right thing there. And you could get into the Dogecoin, mate. That was the other thing that boomed and bust more recently. And we will get into the crypto later on because we are having fun. And so is crypto. It's been having an interesting ride. But let's have a look at some of the more interesting news that is not being talked about enough, in my opinion. Mapping Keegan Palmer's journey from local bowl to southern Gold Coast in the Tokyo Olympics. He's not affected by lockdown, Jason, because he came from the Gold Coast. That's how he got in all of the training. And so 2 new sports in the Olympics being the skateboarding and bicycle riding or BMX riding. And so 2 of our Australian athletes, 1 gold. So he had a bowl or the whole Olympic setup built for him to practice before the Olympics, and then went over there and took gold. Unbelievable. Still getting ID checked as he goes into the pubs. And Logan Martin wins the gold in the BMX freestyle. Can't believe this wasn't talked about more, Jason, because Logan basically has his own skate park or as his own facility in his backyard. But have a look at this on the left-hand side. In the safety run, completed a switch triple tail, which, Jason, I think I remember you performing once upon a time in your BMX days, allegedly.
Back in my day, yep.
But apparently now Logan has actually claimed this as his own, as the only person in the world to have completed this trick. Only he can do it. Other than that, with the old handleless handlebar front flip, which I know was a favourite of yours back in the day, Jace. And so as in normal style in Australia, we love to support people who are out there winning. So when they came back, we, of course, sent them down into 28 days worth of lockdown. Thank you for our Olympic team. You've all got to go into quarantine. But good news, Jason. I hear that the Australian hockey team bought enough beer for everybody. But coming to the more financial side of this and staying on the positive side, Lionel Messi to be paid by PSG partly. So did you hear about this, mate? So he cried.
No, I didn't hear about this at all.
Barcelona. So Barcelona, one of the greatest football teams in the world, and for those Australians out there, who is pretty much our whole audience, that's soccer. And when I say greatest, that's allegedly. You know, it's certainly been an incredible team, Barcelona, in recent years, and pretty much ever since the league started. Cried as he left. So arguably the world's best football player, and he left. He's gone to PSG, and on top of a signing bonus of $40 million Australian, throw another P in the soup, Jason, to hell with poverty on that one, or a salary of $55 million Australian each season. They've signed him and announced on Thursday Messi's financial package would also include cryptocurrency tokens. Now, it was a few wine wisdoms ago that wealth wine and wisdoms ago that we spoke about NFTs, which are non-fungible tokens. And remember, Jason said, let's keep a good eye on this because this is something that is going to go absolutely out of control. And I believe that this is the first sign of it. Tom Brady in the US just launched his non-fungible tokens business. It's just a fun word or phrase to say, isn't it? Non-fungible tokens.
Fungible sounds like fungi, like mushrooms or something. You know, like it.
And I heard one of the world experts on this this morning in Bloomberg describe it as the difference between the baseball cards that you get. And he's gone, well, what is it about a baseball card that gives it value? And I'm got a little bit later on about what you should know about cryptocurrencies and currencies in general. He said, what is it about the card that makes it so valuable? Is it the paper that it's on? And is it the plastic that's around it? Well, arguably we'd say no. It's the scarcity of that object or the scarcity of that. So he said, well, why would it be any different in the digital world? And I've got a lot to talk about later if we get into things you should know about currency, store of wealth, and tradable, and how this is all going to start to play out. Because even though the old crypto world has taken a bit of a hammering of recent, I think we're at the very beginning of seeing something quite remarkable in the world of trade, or maybe even we'll call it currency at the moment. And when the world's arguably best soccer player, Jace, gets paid in crypto, then I think that the signs of the world may start to change a little bit.
Mate, I reckon you're dead right. And like you and I said, I think it's inevitable anyway. It's well underway, and governments and institutions and big businesses are all at the table now, understanding, trying to make sense of it. And the capitalization is in the trillions and trillions across the whole market of the whole world in this space. It's not a drop in the ocean. It is absolutely a behemoth.
Absolutely.
And
it's not the sleeping giant. It is the walking giant.
Walking giant, yes.
Other things that you won't see in the news without a negative connotation attached to it is that we love the phrase record highs, Jace. But
it's been records after records after records.
It's records. It is absolute records. It's so the S&P 500, which is the US top 500 companies, hit an all-time high, legitimately all-time high again. Again, you can see it up the top left. You can see that's the 5-year chart. I can promise you it wasn't greater than that beyond 5 years. It just it goes down and down and down to the left. 4,460, Jason. Incredible. And it's not just the big tech that is showing that now. We're getting a lot of support from a lot of the value stocks. And now people are trying to say, well, there's growth value stocks.
Huge, Andy.
Unbelievable. And so see that dip in there, that tiny little blip.
Yeah.
That was the pandemic. Can you believe it? Not so long ago. And then when we jump over to the right, which is the All Ordinaries, which I think is a bit of a shitty name for the Australian stock market.
It needs to be something more inspirational, Andy.
What's your stock market called? It's called the All Ordinaries. What's
We,
so
we should
ordinary
be
about
called
it?
the extraordinaries,
The
right?
extraordinaries.
Are you extraordinaries? That's what
The
it should be called.
The all extraordinaries. Well, you are what you say you are, Jace. And so the all ordinaries, but now coupled by Jason and I, maybe the new index that we will create together, the all extraordinaries, is now 7,897. And looking to try and bust the 8,000, which, gosh, if it gets there, I tell you what, it's absolutely incredible. And on the back of that, painted in the news in reasonably poor fashion in most of the circles. Listen to the language. Commonwealth Banks spurging profits lifted Australian share market to all high. That was the most positive take I could find on the Commonwealth Bank's rapid success. The Commonwealth Bank jumped 1.5% to $108. Around its highest levels ever after reporting an annual profit of 19.7%, which is absolutely massive. CBA said its 8.8 billion profit from continued operations was driven by sustained economic recovery from the coronavirus pandemic, which is, mate, it's quite incredible to look at the world through the lens of the massive amounts of positivity that's actually out there when people are looking at their portfolios, their investment accounts, when people are looking at what our athletes are doing and then getting locked up as a result of it, poor guys. But, that's what happens when you come back prosperous from other places. We've got to cut you down a little bit as the tall poppies, but hopefully they've got kegs in the camp. But, mate, everything is going up at the moment. It is up, and up, and it is a joyous world if you look for the right headlines around. And there is a lot to talk about other than fear mongering out there. I think it's an extraordinarily positive week in the markets, Jace. We're locked up down here, but it's beautiful outside now in Victoria. It's a beautiful, beautiful precipice of spring day here in Victoria, mate. What's in the news over there in the Sunshine State?
The Sunshine State. Well, it's always sunny here, but it just got a bit cloudy. So, but there's someone else on your bandwagon here, mate. They reckon it's been a beautiful day in Melbourne here. So we've got two corroborating. Is that the right word? Corroborating your story.
Corroborate. Mate, absolutely.
It's great to see, mate. But plenty going on over in my neck of the woods. But like you, I was quite interested to see what's going on with the CBA, and they're certainly a good day in the world of cash on hand, and they're buying back. I was chatting with my crew this morning, just saying, hey, the lenders, the banks, they are what I would call reasonably smart cats, and they're not going to miss an opportunity to make a dollar. What we do know, Andy, you and I both know, we need our banking systems to be healthy for an economy to be healthy. And while you and I have been reasonably critical of times of some of their techniques and attitudes, it's good to see them profitable and just make sure that they continue to operate and attract, a stability in our country. That's what we need for investment and all sorts of other things, AAA ratings and so on. But certainly my commentary in and around the banks were, hey, when we could, you and I talked about this, if there were some challenges in your world in the early days of the pandemic and the banks were allowing people to say, hey, listen, pause your mortgage for a bit, squirrel a bit of cash away. We don't know what's going to happen. Don't feel bad about that, because the banks won't lose on this one, team. And I guarantee we could go back to that bloody recording and we could say, hey, the banks are doing the right thing, but don't you worry, they will benefit. And have a look at this. And this is their benefit date. They've taken care of themselves. While for the first time, I think, to be honest, taking care of the people that they should be taking care of as well. So it's good to see plenty of money there. Buybacks, dividends. It's always good in your neck of the woods, Andy, when dividends and buybacks happen for people and investors. That's a nice day in the market, a nice reward for what's going on. So I like that one. But one of the ones that I was going to bring up today, there's two. and it's a little bit of a twist, a little bit of a turn coming up in the marketplace. Some global impacts happening in the world of real estate. And I'm going to zoom in on this for everybody here. So the build to rent players riding in on the perfect storm right now. Build to rent. Australia can't, Melbourne and Sydney are one of the most expensive cities in the world, not just Australia. On world standards, they're in the top 20 or something like that when it comes to the cost to live in those places, from the cost of real estate and so on. Now, I've said this before, Australian real estate is not going to get any cheaper unless we get another 20 million people in the country, Andy, and that's going to take a long time. We are the only nation in the world that we don't have a low cost labor force attached to our country. And that's not New Zealand, by the way. And so you can't argue that one. Every other economy in the world has a neighboring country where they have low cost base for construction and, labor, where Australia does not. Okay. And so there's some benefits to that, but there's also some downside to that. So cost of property and building and our world of those things are not going to get any cheaper. You make more money as a plumber than you do as a dentist. Get that, right? If you're a good plumber, you'll make more money than a good dentist, and so on. So one of the schemes that has been taking the world by storm, by the way, team, is the big businesses, the big players in the world are now getting into residential REITs, Andy. You and I have talked about this before. It's been very attractive, commercial and industrial REITs and so on, because the yields have been so great. But because the world of residential real estate is quite attractive now in comparison to defensive assets like bonds and cash and other things, these investment behemoths are getting into this sort of thing in a big way. Build to rent. The plan of just one of these build to rent businesses, Investor Property Group, partnered with Canada's Oxford Properties out of the US, right? So these are $1 billion funds. Their plan is to have $5 billion worth of apartments in Australia within the next 5 years, 5,000 properties across Sydney and Melbourne they're targeting, all right? And so they are going to absorb this high-density apartment stuff in and around Sydney and Melbourne, where we have chronic shortages already, all right? And flipping this as a good news story, team, all right, this is going to make supply even tighter and accelerate or even continue good quality properties, values, and also attractiveness to rent, right? So these guys are going to take out lots of supply in the marketplace, and it's already at record lows. Record lows. So that's an interesting one because, this is one to watch. It's a silent achiever in Australia's marketplace right now. So this one is just an extension on what are the forces that are going to continue to push our property market along. And that's certainly something that's quite interesting. What do you got there, Andy?
Well, Jace, you and I have spoken about this a number of times, and I just want to dovetail this on the back. And we didn't collaborate on this, as most of you know. We prepare heavily for this every single Friday. Spend the whole day preparing, if the whole day is in minutes. But we've been talking about Japan for quite some time. And so the world needs stable returns. The world needs income.
Yeah.
And what's the big fear, Jace? What's the big F? And there is an F in it. But what's the big fear when it comes to markets at the moment?
Inflation.
Inflation,
mate.
So let's go back to the only country in the Western world, the only sort of more westernized country, Japan, that has gone into low interest rate environments. And as you can see here, zero and below interest rate environments. Now, Japan's got some incredible opportunities over that period of time, but Japan is not an unadvanced country.
Economy.
It's a very, very advanced country and economy. But it has never been able to lift itself back from the Asian currency crisis that happened back in 1993, I think was when they coined it. And it's pretty much been down there for a long time. So we always say, Jace, that history doesn't repeat itself, but it's an incredible mimic. Well, there's nothing to mimic about interest rates flying through the roof. So when this comes to property and this comes to residential and this comes to the reason why you and I were talking about, syndicating and unitizing residential is because bonds and government bonds are the stability of a nation paying a low interest rate based on the stability of the backing asset class. And if you then go, well, if we can't go government bonds, what's the next most stable? What's the next most stable? And we start to give a return profile based on risk. Well, you've got to start to think, well, it just makes sense. Everybody needs a place to live. And if you can't afford the place, then it's likely that this will probably become a good asset class to get involved in. And if we had a few $100 million, Jace, probably 6 months ago, we would have already started one of these up ourselves. I reckon you're going to see a lot more of this coming through because I'm not saying that interest rates won't go up. That's not what I'm saying because I don't have a crystal ball. But when you look at how difficult it is to raise interest rates, no one's done it.
No, you took the words right out of it. Once you're on the gear, Andy, right? Once you're on the gear, mate, once you're on the low interest rate, there's no going back, mate. How do you get back on that? Like, you're sitting there, politicians, policymakers going, shit, we need to get interest rates up. You know what? If we put the interest rates up 3%, every single fucking homeowner is going to be in all fucking sorts, right? So, and this is my call, and you and I have talked about it. I reckon we're down there like sub 4% interest rates for the next fucking forever. That's my call. I think our politicians are too gutless to do anything of that, are too edgy when it comes to that sort of stuff. So, there you go. They backed out of chasing down negative gearing and capital gains, thankfully. But that's only a political stunt. They'll probably circle around on that one later. But, there you go. So I think once you're on the gear economically, mate, yeah. And then, like you said, it's going to be those returns, those net returns are going to be amazing. How does the interest rate drop to, or the cash rate drop to whatever it is, and the banks make, not record profits, but amazing profits? It's because they know how to split the margin. Gang, it's not about what the interest rate is. It's about the margin you're making on the rate itself. And those big businesses, Andy's been in those circles for 20 years, they know how to squeeze a margin, Andy, and
they can get the access to the cash, right? And if you can control the cash and get it at a low rate, then if you've got a good business model, and this goes into the equity markets, if you can borrow at 1%, well, a good business doesn't exist unless it can generate a gross profit of somewhere between 30 and 60%. And a net profit of somewhere between 20 and 30%, right? And this is a big generalization, but it's taking in all sorts of things from manufacturing to tech companies. But ultimately, below the 20% net profit, well, so if you can borrow at 1 and you're producing the average, which is 20, well, that's 19 times the return on the cash. And this is why, when governments try and lift it, then all of a sudden you pull handbrakes on economies, because all of a sudden the banks go, well, you raise it to 2%, that's twice. You've lifted our cost of funding by double. And they go, but it was only 1%. But it's like, no, we've had enough of the crack, right? We're addicted.
We're on the gear.
Now we're deploying at this level, but that level is based on how much we're paying for it.
Yeah.
And then the smallest adjustments, the lower you go, the smaller the adjustments make bigger differences. Right. And it's going to be difficult. And so it really is going to be interesting. Like, my bet is that we will be in very low interest rate environments for quite some time. And it's a hard one. I'm not going to say go out there and spend your house on it, because I mean, the Reserve Bank have done some pretty unusual things in the past, and so have our politicians. Gough Whitlam, yeah, God bless him, have done some very, very unique and interesting things in our time, which have really disrupted everything. But
Dead right.
one would look at it and one would go, this type of investing, Jace, is going to become mainstream. I reckon. I'll coin it every day of the week. I reckon you will have retail investment property trusts as far as based on
residential retail. Yeah. And Nate brings up a good point. It's kind of like, the cost of government debt goes up too. So, they're not going to be rushing out anytime soon to make them look a lot worse either.
And Nate, they're not going to take a pay cut either. Like we've seen that. Old Dan got another bloody raise in the middle of a pandemic. So they're not going to cut their wages. So
there you go. So I reckon we're going to be low. I think, like you said, we're going to have these things be more. And what does that mean for property investors, folks? So the reason I brought this up is because actually, guess what? The Victorian government has done, Andy. They're so friendly. They're so nice. Victorian government has said any build to rent business can have a 50% land tax deduction for the next 20 years if they come to Melbourne. So they'll pay 50% less land tax than you and me, Andy, right? The Victorian government. It's right there, black and white. The Victorian government's going for it. They want these projects in Victoria, and they're going to halve the land tax for them to be there. What's that going to do for Melbourne? It's going to take more stock out of the system, team. It's going to take thousands and thousands of pieces of real estate out of the system that you and me used to buy, Andy. We used to rent out, right?
100%. And Jace, it's on the positive side of the equation, because I'm not going to be negative today. I reckon on the positive side, you'll probably see contributions to political campaigns jump quite markedly in Victoria based on what you've just said there. So I reckon there'll be a big boost to the campaign spend. They'll probably start advertising more, the sneaky little fuckers.
Go back. No, it's exactly. Well, there you go. And for me and for the clever investors who understand what's going on, Andy, we can't stop this stuff, right? And we can only maneuver and understand, hopefully, in the right way, how we can take advantage of this, because that's all we can do. The political decisions are, quite frankly, probably, to be honest, Andy, our biggest risk as investors. Like, what would you say? Would there be any bigger risks? It's mostly political.
Political risk. It's the highest risk. It's superannuation, the full box and dice. And it's ironic, Jace, because they're the ones who set the rules. It's like, and then they say, well, you shouldn't be looking at it from political risk. It's like, well, stop changing the fucking laws, and we'll stop saying there's so much political risk.
Yeah, just leave it alone for a bit so we can get ourselves a bit of momentum. Well, here's another risk thing, Andy, that I wouldn't mind talking through with everyone. It's one to think about, team. Looking at this map here, and I don't know if you guys have been paying any attention to this, but put it in the chat for me, everyone. In Australia, Andy, there's a question for you. Everyone answer this question.
I love these questions. It's definitely not staged, but I reckon I'm 80% at the moment. So
you're at 80%. What's the most valuable real estate in Australia? Everyone says if you can buy it'll never be a problem. Buy one with a view, it'll never be a problem. It's
property.
It's the beachfront, right? It's Australia's catch cry. You buy anywhere beach in Australia, it's more valuable than not. All right. And team, I've heard this, and I've done it. I've done migration of my money. I had a property this was 15 years ago, property in Kalgoorlie. I crushed it. I bought it for $98,000. I sold it for $390,000. I then took my money and I bought a waterfront apartment. Absolutely cracking. Everyone's done it. Move your money close to the beach or the waterfront. You'll be happy. Well, guess what, team? Guess what? Two things happening right now, Andy, that are going to affect us in about 15 or 20 years' time, maybe even sooner, depending on what's going on. I don't know if you guys were paying attention to the announcement about, the weather issues, the global warming issues, some of those things, they're for real, and they're showing up economically now, Andy. They're showing up. Australia is going to be affected fairly significantly based on all the research if we don't get our shit together on this. And when it comes to real estate, team, here's what's happening. It's already in scenarios at Lloyd's of London. Go and check this out. Lloyd's of London has identified over 200,000 oceanfront pieces of real estate in Australia. They will not, and I'm going to say this nice and loud, they will not, good on you, Aaron, you're on it, mate, they will not insure. You tell me how much those properties are going to be worth, Andy, when you cannot, for the life of you, get insurance for those multi-million-dollar properties on beachfronts in Australia that, by and large, it's almost inevitable, and I hate the negative version of this, but I think we can do it if we all pull together, that will suffer from severe weather events. All right? So, team, these are the things that we need to know into the future on property. The old adage, get a beachfront bit of real estate and you'll live the dream. It'll all be good. Right now, that is not as solid as it used to be. And so this is an interesting one. And also, Andy, you could probably shed some light on this. The government was talking about Australia having difficulty securing funding because of how badly we were going to be affected in this report when it comes to this stuff as well. So, a few things to consider in this sort of space.
Mate, on a positive note, they could all be full of shit. So I guess my positive note on the hypothesis. But look, there's definitely chat about this going on. I'd urge a lot of people to go and read Freakonomics, Super Freakonomics, and have a look at some of the data that comes from there. That these is sort of rogue economists, behavioural economists. There's also
I think I've got it in
forgotten his name. He was a Russian meteorologist who used to talk about 50, 60-year cycles. Because what I know, that's it. Lovely gang from Freakonomics. What do sumo wrestlers and gamblers have in common? Is one of my favourites in there. I think I've completely butchered the saying. I've crushed it like Margot does a colloquial saying. The early bird gets up early, or whatever she would say. There's different schools of thought on this as to the compounding effects, and sometimes we can have effects come together at the same time which magnify. And some of the thoughts behind this, and this is all study, and I'm by far and away not an expert on this sort of stuff. I do like to read about it because I find it interesting. But effectively, so there's a hypothesis from, and he was I can't remember his name. Maybe it'll come to me by the end of the episode, but it's a long time ago. A Russian meteorologist who basically said that the global warming actually happens in 40 to 50 year cycles based on the gravitational pull of the world, based on black holes and other stars and stuff that exist in the galaxy, which means that every 40 years we get closer or further away from the sun, and that has an impact on the global warming. But it wasn't to say that global warming isn't happening. It's saying that within these 40 to 50 year cycles, that if we don't treat the world right, we're going to get really big warning signs every 40 to 50 years.
Yeah.
Now, this is all hypothetical and still non-proven types of theory, but one that we should be taking good notice of. And that was my best attempt to try and turn it into a positive. To be fair, I'm really struggling here because you've just flooded the whole fucking coastline of Australia. But here it is. There's going to be new beachfront property available very, very soon, Jason. That's what we're saying. The old beachfront isn't the new beachfront. The new beachfront's a few suburbs in.
Well, Andy, part of what I wanted to, and potentially we can turn this into a bit of a fun chat, things you should know. And I was thinking about it today, folks, is that buy 30K from the beach, Nate said, buy up on a hill and there you go.
A room with a view, but just make it an elevated one. Yeah, top story.
Yeah, exactly. But, what I think's important for us as investors, or any sort of rational person, is to think about how we think, Andy. And you talked about it earlier today. The media, how if you do get a bit connected or obsessed with watching the news, it can fuck with your head. And we all know this, right? So you got to manage that and turn it off and get and consume good stuff. But one of the things, Andy, I was thinking about today that you and I might have a bit of fun with is like, all right, let's say, for example, in my world, negative gearing. Okay, so they've removed negative gearing in New Zealand. Okay, and that becomes
by removed. By removed, you mean remove the tax deduction, or?
Yep, they've moved the tax deduction. And folks, I don't know if everyone knows this. The government removed over 70% of negative gearing for property investors on secondhand property, even only 5 minutes old, Andy. In 2017, team, a secondhand property now, you get 70% less depreciation / negative gearing effect by buying a secondhand property. But one of the things I thought would be interesting is this concept that I've coined, according to who, compared to what, compared to what, and so what, Andy, right? So let's play a little game here. And so we go, all right, hey, Jason, hey, Andy, did you know that?
Can we hear that one again, mate? What's the phrase? Say it twice. And
so it's according to who, compared to what, and then so what? Just
say that one more time, because I just want to translate this for the audience. So
according to who? According to who?
Shit. Yep, you're full of shit. Yep, okay.
Yep, according to who? Yep. Compared to what?
Give me the facts.
Yep, exactly. And so what?
Nobody cares what you think.
I like it. Well, and this is the idea, right? So let's say, because once we get past some nuts and bolts, Andy, understanding numbers and investing, and a little bit it takes a little bit of uphill learning, a new skill set. But once you get a certain couple of things dialed, it's an internal game, right? It's an internal game. We know this. Whatever you do, if you're in business, whether you're investing, whatever it is, it's an internal game. So then we got to say, all right, well, how do we think better? All right. And then you hear something, right? Somebody says, oh, they're removing negative gearing. And it's like, well, according to who? Okay. So according to, well, where did you get the information from? All right. Okay. So then you go, well, okay, even if they do, which might be the government, that might have an effect, but compared to what? Compared to what? Is it actually only isolating real estate, or is that negative gearing across everything? Because it is. They don't just take negative gearing away from real estate; they take it away from every asset class. So then you go, well, then so what? Who cares? It doesn't matter, right? So negative gearing has nothing to do with real estate. Negative gearing is a tax process of adjusting your personal tax income against losses that you make in the pursuit of investments. And pursuit of investments can, Andy, you know a lot more about this than me when it comes to the world of what constitutes an investment. It can be fucking ostrich eggs. It can be a car. It can be wine. It can be real estate. It can be shares, right? And if you invest in your personal name, then you have the ability to offset any of the costs of that investing against your personal income, and that's called negative gearing, right? So what I find really useful in thinking is going, who said that? According to who? All right, find the source of the information. If someone can't give you a source that's actually got a brain and got a reputation of actually capable of giving a comment in this space, then ignore it. Then you go, well, compared to what? Even if they do remove negative gearing, then is that going to disturb long-term my investment? No, it doesn't really matter. Then so what? And I think that's a really good concept in this space, Andy. It's kind of like, there's a lot of potential negative news going around, and then we should have a little concept, a little sort of mental process of just checking in that we don't get caught up in it, as we
100%.
go.
This is why Yogi has some of my favorite sayings is the future isn't what it used to be. And it comes from exactly that. We have a preconceived idea of what the next period of time is like. But the only irrational thought is the thought that that's a rational thought, because it is never, ever the same as what you believe it to be. Let's break this down a little bit, Jace. Let's break this down. You had kids, right? You've got them. You've got them.
Got three of them. Got three of them. Anyone want like I could do with like one or two less? Anyone want less?
So was there a degree of utopian kind of vision as you went into that? It's like, I'm gonna, crush this like nobody else has ever crushed fatherhood before in the world. I know that everybody else says it's difficult, but I'm different.
Were you looking over my shoulder? Were you like?
The future isn't what it used to be, was it, Jason? It's certainly changed. And here is the same thought: is that the thought that the world will remain consistent is actually an irrational thought. So the thought pattern is, and this is why we say the world is an incredible mimic, or history doesn't repeat itself, it's an incredible mimic, is because the true thought is going, well, how is it going to be different this time around?
Yeah.
And if we start to apply that different thought pattern, and quite often in policy, that this isn't thought about enough. Policy quite often, especially in Australia, where we are one of the worst in the world, but in a positive fashion, we're probably the best in the world at irrational thought in politics. So we're leading the world in some aspect. And so when it's reactionary, you create laws in order to stop something. But the reality of finance, the reality of economics is that we are an ecosystem, in that if the crown of thorns comes into the Great Barrier Reef, and it will destroy some parts of the sea life, but it will bring other parts. There will be natural balance that will start to come. And the question starts to become is that, well, given the changes that are coming, what is the new evolution of the world, and what is it going to look like as we move forward? So who is this peanut that said whatever they said, who had a misguided belief that this time they are right and they will always be right? And the reason why they're right is because it's a belief that they had based on a fixed construct of how things used to be. And what we all know is it's going to be different, but not necessarily wildly different. But with negative gearing, one of the thoughts, because you know what you and I do, Jason, back when they first started talking about removing negative gearing, and we thought about repealing capital gains tax, we were looking at all the advantages of that. We're going, oh, this is incredible. The velocity, the construction that'll take place, the old houses, they will be shaking in their boots because construction will go wild. And what is the end result of that? It was the exact opposite of what they were trying to create. They were trying to curb housing prices by this type of theory. But that theory did nothing but smash down old buildings, build new ones, and launch the property prices through the roof, which was counterintuitive thought.
Mate, it is dead right. What are they? And I don't know if it's Einstein or whoever. Nothing is neither created nor destroyed. It just changes form, right? Yep. So they close one kind of idea, and then the energy transforms and appears somewhere else. And it's the same laws that in nature appear in the financial system. A lot of people don't realize that, and that's where you and I, Andy, have talked about this. When there is the zombie businesses, when there is things that happen with government intervention that don't allow the natural course of economics and free market will to take its course, then that makes dysfunctions in the economic system. I think COVID was an extreme example when we just had to go, right, let's just take care of everyone. But as this flows out now, and the whole economy needs to kind of get itself back into its stand on its own 2 feet, that's where we'll see a little bit of the shakeout. That's where we'll see opportunities, Andy, popping out, and new amazing industries and businesses just coming from nowhere. And people would say things like, oh, I never would have thought of that. But you know what? Lots of people did, Andy. Like something that shrank gave room and way to something that could grow and turn into probably billion and trillion dollar businesses that will have been created in these times. Yeah,
Trillion-dollar businesses.
Hey, the puppies.
Trillion-dollar businesses created. There you go. Who would have thunk it? Who would have thunk it? The pandemic created billion-dollar puppies. But look,
I've got this bloody messenger thing going on, and it's annoying the crap out of me. You keep talking, while I'm going to try and turn this messenger thing off.
I can hear it going in the background, but I've got a question I'm going to throw over to you, Jace, because you've thrown a few curveballs at me today. So I'm going to throw one to you, and I'm going to throw one to all of the viewers out there as well. Who made more donations to charity in the last week than any other individual on the planet? And can you guess the number? Ooh. And can you guess the person? So here's a good news story.
I was going to say Bill Gates or Warren Buffett would be my two guesses, but only because they're fairly famous for doing some stuff at the moment. Billions, couple of billion, 8 billion, 10 billion. They're my guesses.
No, wrong. So anybody else out there? Gates's ex? There's a bit of. What do you reckon that Gates's ex actually gave him too much? Gave it away as a charity. Who's making the most out of the vaccines? We've got some pretty Elon Musk. We've got some pretty cynical people out there, Nate. I'm thinking Viv is Gates's ex-wife as well, and who's? Let's see if somebody's actually going to coin this one. And I got to grab it because I wasn't going to talk about it, but I was listening to it. And, so this is Gina Reinhardt. I don't think so.
Bezos.
Bezos X. So there you got it, and we don't know who you are on that one because you're coming through one of the threads, but we'd love to know who you are because we'll send you out a little bit of a thanks. Whoever guessed Bezos, just whack your name in the chat.
Melinda Bezos, supposedly. Oh, that's Melinda Gates, I think. Amazon's ex. There you go.
It was Mackenzie Scott, ex-wife of Amazon Jeff Bezos, announces billions in charity donations. And look, I'm going to completely and utterly butcher these numbers, but she literally somewhere in the vicinity of $2 billion just gave it out allegedly without any major philanthropic strategy or board of advice that came. It literally just went bang out there. And so the first article I read about this was how the lack of consideration, the lack of boards, the lack of due process and thoughts. Yeah, can you believe it, Jace? Can you believe it? I think, and so this is, and it was beautifully recoined by somebody, and I can't quote who it was because I was running and I was watching it on whatever channel I was watching it on at the time, and they just went, these reporters are just narcissists. These reporters are narcissists. Let's break this down. She inherited, and I'm going to butcher the numbers, but they're going to be broadly right. She got divorced. She got $32 billion.
Oh, Lordy.
She did nothing while setting up a charity, trying to figure out how she was going to deploy it, and that went up to almost $60 billion based on the share price of Amazon. She's given $2 billion away. Stop being parasites and just applaud the fact that this woman has actually given more money away than almost anybody in a single whack. Just like that. I have too much, and she's vowed to give it all away, Jace. Vowed to give it all away. I don't know what all of it means, but a majority, I think, was mandated. Or she created the mandate of her organization that said, I'm going to give a majority of my wealth away. So a majority would be at least 51%. And at the moment, that is $30 odd billion that's going to be given away. And there's somebody out there who wants to make a bit of a dick of her. But I think that there's only one dick that is clearly the person making these wild comments.
Wild comment, yeah. Well, mate, at the end of the day, you think about it, right? If you got a nice home and you got a few things, then what does it cost to eat and have a bit of fun. Call it $2 to $5 million a year if you really want to live at large. Yeah, why not? Why not? At the end of the day, that's great. I think that's fantastic. What you and I both know, Andy, is that money's job is to keep moving, because when money stagnates, it becomes rotten. It becomes rotten, and it needs to move, and it needs to do things. It needs to add value. It needs to create businesses. It needs to. That's what it's meant to do. When we stagnate money and wealth, it goes rotten. It becomes not great. So there you go.
And it's a redeployment, because I think, like, my take on this, and I don't know her from a bar of soap, obviously, but I think, Jeff, you might be able to take her out for dinner. We'll see whether we can reach out through our channels that have no contact with her whatsoever.
Slide into her DMs, Jeff. I've heard that's the way you do it.
By direct message. It's just, Jeff's gone, I'd take her out for dinner. And Jeff, if we could make it happen, mate, we absolutely would.
There you go.
Hopefully this isn't watching. But if you don't have a dream like Musk and some of the names that were brought up, Musk, Branson. So Elon Musk wants to bring a satellite network in order to enhance the total connectivity of the world. He's got quite incredible visions. That costs a lot of money, and that will cost billions to do. Branson wants to commercialize space travel, and that will take billions. And this will have an incredible effect on the world. Hopefully a positive one. I reckon it probably will be a positive one. Bezos, not quite sure. His rocket was shaped like a great giant Johnson.
My 11-year-old's like, Dad, that looks like a big penis. And I'm like, yes, it does, mate.
Well, I don't know about big, son, but it certainly does resemble something like that. But they're moving the money around the system. And if you don't have a vision like that, Jace, you're dead right. Like, what's the point of storing $30 billion somewhere just so you can look at another zero in the bank account, when the likelihood is, a couple of $1 billion would probably see them more than what they could spend in a lifestyle that they would want to over that period of time. And the realization of that, in order to deploy that money back into the system, I think is to be celebrated, not discriminated against. I can't even figure out how people start to talk about this in a bad way. It's like, the benefit is that money is back circulating through the economy. And what better way of getting it circulated through the economy than putting it into the place where it will get injected straight back in? You put it into charity, it'll be deployed for the resources of charity that goes into food or building or society. The building then goes to the laborers that put the building together, into the bricks, into the mortar, into the factories, and the money starts circulating back into our pockets rather than being stored. And
right. Yeah.
I cannot think of a better thing to be doing. It would be difficult, because imagine doing that, Jace. How much money are you going to give away? Well, I just made 30 billion. How much is that? No idea. No idea. I've got $1 million sitting on the table, and I'm pretty sure if we filled every room in the house with $100 bills, we still wouldn't get there. So let's just put it this way: I gave away the garage.
And $1 billion. I saw $1 billion trillion. I saw some, and maybe Andy, you could have a quick search online for like the context of a million, $1 billion, and $1 trillion. I think it was, and the context visually is just insane. We've got a few questions just quickly. I'll quickly mention. Adrian said he's refinancing 3 investment loans. Hopefully you're still listening, Adrian. Refinancing 3 investment loans to Tier 3 institute. What's the cons? Adrian, maybe you can tell us in the chat what institute you're refinancing with. But, if that's like a Liberty or Latrobe or, one of those type of lenders, Resimac, Firstmac, they're all quite safe banking institutions if they are the registered mortgage holding institutions, warehousing mortgages, mate, that they're perfectly fine and safe when it comes to the world of lending. One of the downsides of them, Adrian, has been that the products and their technology is not that flexible. So, mate, you don't get, really good online interfaces for your balances. You don't get lots of people answer your calls. You got to sit in a phone call line for 3 hours to get your phone call answered if you've got a question. They're kind of like the no frills brand of lending. Often those ones, you get it cheap and cheerful, or you get it easy, because sometimes you don't get cheap and cheerful in third tier lending, but it's easy if you're a bit of a difficult case, kind of like me and Andy. To be honest, we're both difficult quite cases to lend money to. But mate, the cons of them can be that they're difficult to get access to ask questions, and also shift your money around. No, like net banking, you don't get a credit card or a debit card for offset accounts, et cetera, et cetera. So that's the cons, but there's no safety issues, mate. And unless you sort of put something in a name in there that I'm like, whoa, I've never heard of them, mate. That sounds like a bunch of bikies. Then you're going to be perfectly fine. So hopefully that answers your question, mate. And away you go. Candace asked, can I do a wealth coffee chat on the pros and cons of negative gearing? Answer is yes, Candace. I'll do that next week, Monday or Tuesday. I'll get on to that. We'll dive into it. So that'll be for all the positive crew. So make sure you jump on that one, which is kind of cool. So that was a couple of questions there, Andy. But did you find one of those? Here we go. Let's have a look at that. Let's have a look at the context of that.
So, mate, we've got 10,000.
Yeah,
this is in hungies, mate. This is in
$100 bills. Yeah,
it's in hungies, mate. You should see it when it's in ones. Let me see if I can get you the one that's in ones. But
there you go.
So we've got the hungie, we've got the million, and a million doesn't actually look that much. Really,
no, you could carry a million around in your arms.
You could carry, but like in the Wolf of Wall Street, when you strap a few $1 million to you, you start to look a little bit more like the steak puff marshmallow man. And I'm just going to drag and drop something across, see whether I can actually get this up. But then $1 billion is down the bottom. So as I said, she's given away a garage, mate. She's given away a couple of. But if you were to stack that up in ones, mate, let's see whether this is transposed across. There we go.
Yeah.
This is what you're looking like, mate. And you can see us just sitting here. So this is the billion in ones sitting in there. So, mate, there's a fair bit that's flowing back around. There's a few wallets in that, I would say.
I reckon, mate. I reckon. No, well, good on her. I'm glad that she's keeping the money moving. And like you and I both know, that's great for economies. It's great for jobs. It's great for people. And to be honest, it's great for inspiration. Like, these people who, Elons and the Jeff Bezoses and the Bransons, they do edgy stuff out there on the fringes where, people who don't have the resources but they got the brains can come and do amazing stuff. I believe that's where the world, things like our global climate challenges will be saved by people like that with money and attract great people with great brains. So probably a good way to sort of wind up the night, mate, and say good job, mate. It was a good, positive wealth, wine, and wisdom. Led with the puppy story, and Alison's got a new side hustle, and with the puppy, the puppy sales, mate, it's all happening.
The puppy pandemic. You heard it here first.
Pandemic. yeah, exactly. So, folks, great to have all of you guys on and hanging out on a Friday night. I've got pizza waiting down the house for me, so it's pizza night in my house, and looking forward to that with the kids. So, mate, good to see you, brother, as always, and fantastic to have all of you guys on tonight. Thanks for hanging out and being great sports and giving us shout-outs. And you guys have an awesome rest of your weekend. My wine's done and dusted. Yep.
Still got a little bit in the glass, but
I'll ring that out.
For this week.
Sorry? I'll slowly drink this over the next week, Andy. That'll horrify Andy as it does.
Can't be done. D, please get him another bottle and get somebody to drink the rest. But
that's it.
For this weekend, I reckon that's a wrap. So, mate, it's good night from me.
And it's good night from him. Good night.
Good night.